Okay, we have three undervalued stocks that analysts love. My name is Hugh. I'm from Wall Street X. A reminder that most active funds do not beat the S&P 500 long term and to always do your own research. But the three undervalued stocks that analysts love right now are Block, XYZ, Reddit, RDDT, and New Holdings NU, thanks to their low valuations and their high earnings growth relative to their peers. Starting off with Block, XYZ. Block has been down over 70% in the last 5 years. Block is a low valuation relative to its EPS growth forecasts. Peers like PayPal have a price to earnings of about 8.5, and their forecasted EPS growth is about 0.5% over the next year for PayPal, giving it a PEG ratio of about around 18 over that time. In contrast, Block's PE of 13 and EPS growth estimates of 47% over the next year gives Block a PEG of 0.3, which is what you want to see. It's significantly better than PayPal's. You want your PEG ratio to be lower because it means your valuation is lower than your forecasted growth, and you want to pay less for something that's going to grow more, and that's exactly what you're doing when you buy Block over PayPal. And given Block's undervaluation by this metric, in combination with its latest earnings beats and overall industry growth forecasts of around 12%, we have rated Block a low-risk, high-reward stock, complete with a strong buy rating for us. Analysts have also rated this a strong buy with a plus 36% one-year forecast. Very, very impressive numbers there. The next stock on our list is Reddit, RDDT. Reddit stock is an undervalued asset because, and it comes as a bit of a surprise given its 55 PE, but its current earnings estimates really make that start to look like a bargain, even at a valuation as high as a 55 price to earnings. And given that 55 price to earnings, it's incredible. 57% estimated improvement to earnings over this year by the end of 2026 is what's forecasted, is enough to make this stand out and make it undervalued. This gives Reddit stock a PEG ratio of 0.96, which doesn't sound all that impressive. That sounds like it's pretty fairly valuated, except for the fact that in 2027, it's again supposed to compound another 40% on top of that. So given the internet software and services industry PEG has hovered around the 2.3, and the IT sector around 2.4, Reddit at 0.96 is a pretty good bargain, especially for its EPS growth numbers past 2026. But it's important to note that Reddit's recently broke even, so that's going to impact things, because just when you start to enter profitability and your EPS is low like Reddit's, it's easy to double and triple that, and it's much easier to grow a smaller earnings per share than it is a larger one. And so that's been impacting this as well. But let's note that when Tesla became profitable, they posted their first 4 quarterly profits. Their PE was over 900 at that time. Reddit's is just 55, and I get they're different companies, but that gives you an idea of just how crazy some of these valuations get out of hand when a company goes from non-profitable to profitable, and just how fast that can jump. But on top of that, Reddit has beat both its last 2 earnings calls, and analysts are continuing to revise Reddit's earnings upwards, which is a really good sign. That's really what you want to see. One of the most promising signs is when analysts do that and they revise their earnings estimates up. That's when you see magical things happen. And analysts have rated Reddit stock a moderate buy with a plus 62% one-year forecasts, extremely high, one of the highest we've seen. And we've rated a buy with a 29% one-year forecast. So both analysts and our WSX algorithm are rating this very high. And it's down over 39% year to date. So for that reason, we've put Reddit stock as a medium risk, high reward play, and we think you should buy the dip. And the last stock we have on our list is, of course, New Holdings, NU. We haven't done one on New in a while, but with a PE of 29 and an EPS growth forecast of plus 65% over the next year, New Holdings represents great value when compared to peers like SoFi Technologies. NU currently has a PEG ratio of 0.45, whereas SoFi's is around 0.94, and even that's not bad, at a PE of 51 with 54% earnings growth forecast over the next year for SoFi. And those are really good numbers, but News are better. SoFi, although, has been able to increase its customer base by around 35% last quarter, whereas New was only able to do 31%, but pretty much the same there. And New is down over 17% this past month, but is still up 43% over the past year. So it's still up compared to where it was a year ago, but it has dipped in the past month, and we think you should buy the dip because New has beat its last 3 earnings calls and appears to be great value for investors looking to buy that dip again with that lovely PEG ratio. Very, very high earnings expectations with a lower valuation relative to, other fintech stocks. But the industry just in general as well is expected to absolutely explode. 25% compound annual growth rate for the fintech industry out to 2033 by some estimates. That is insanely high. Very good time to be a fintech company right now. And analysts have rated New Holdings a strong buy with a 1-year average forecast of 31%. We put New as a medium risk, high reward stock and have also rated it a strong buy with a plus 36% 1-year forecast. Again, analysts agree, we agree. This is looking really good for New Holdings. So there you have it. Those are the 3. And thanks for watching, and I'll see you next video.